All right, we're back. Let's talk Marathon Oil. Shares are under pressure today by a couple of percentage points. Sixth straight negative session. Yikes. Stifel, though, says don't worry. The recent weakness is a buying opportunity because they upgraded it today to a buy. $17 is the price target. It's a big move from here. Thus, we made it our call of the day. Now, Jimmy, I turn to you first. You own Marathon Petroleum.
Yep.
Not Marathon Oil.
Right.
Tell me why.
Okay, so actually, thanks for bringing this up because it's a great distinction between a high beta oil play and a low beta oil play. Marathon Oil, what we're talking about today, has a 1.7% dividend yield and trades at a forward multiple about 20 times. This in an energy sector which has, to be kind, been sputtering for quite some time. So in that environment, if you want to own Marathon Oil, higher beta to oil, you need to see oil prices go up and or the rig count go up, neither of which is really happening. So why bet on that when you can get a 4.3% dividend yield from Marathon Petroleum? They just raised their dividend today, buying back shares, trades at about 9 times earnings. It's just an easier way to play this wait, this long wait for the energy sector to perform, which it hasn't and which has been painful to me.
Shannon's got petroleum, not oil. Both Shannon and Jenny have significant energy exposure. Jenny. Chevron, Duke Energy, Enterprise,
Magellan.
Energy Transfer, Kinder Morgan, One Oak, Royal Dutch Shell, Schlumberger, Total. Okay.
You made it sound worse than it is. You know, those are 3 strategies mushed into one long list. But so I actually like this call. I don't own Marathon, right? And it doesn't fit the exact profile of what I'm looking for. But what I like about this call from Stifel is that it reminds us of the stability and the strength of the U.S. energy business, right? And that there is a lot of independence here. So I look at this and I read the note and it's talking about their strength in the Bakken and the Eagle Ford. And a lot of the companies that you listed, Scott, are the infrastructure companies, right? Are the MLPs and the midstream guys. So they're taking the energy out of those basins and transporting it to the refiners. Ultimately, it's ending up in our cars and we're driving around. And so
you don't care so much about the price of oil?
I care less about the price of oil. But I think as long as oil is consistently above 50, there's a lot of money to be made in the marathons and in all the U.S. producers, as well as in the midstream space. The midstream space has much less exposure to the actual price of oil. But so I read this, and I was quite happy because it emphasized my thesis, which is this is a strong and stable business. For me, the midstreams group is the right place to be, which sounds like a lot of the same sentiment that you've got, the right place to be. So I liked the call. I appreciated it. Okay. I think if I wanted to be more aggressive, this could be the right call for me, but it's not.
All right, fair. Shannon?
We do have a number of energy holdings. I would say they're small weightings for us. We do think that oil is going to remain oversupplied through the end of the year, but we do think that, the 2022 to 2025 range, we could start to see, a little less supply coming online, which could create an opportunity. We like names that, are somewhat more insulated. Our highest conviction name in the energy space right now is Valero, but we also like Chevron. And so we think that there are opportunities to own some energy names in smaller percentages, but the overall, I think there's going to overall be a cap on the price of oil, and I would limit your exposure to natural gas through the end of the year. European prices continue to fall, and we're not nearly as optimistic about that portion of the energy market.
These stocks, Joe, have stunk. I mean, I'm looking at the returns over a year. There's no other way to say it, right? Mm-hmm. Everything's just ugly.
And it's impacting high yield credit first and foremost. That's the biggest concern. I'm with Jenny. I have One Oak on Marathon. Capital efficiency, when you're speaking that language in the energy space, shareholders will pay attention. They did so in the case of Chevron. That's one of the reasons why Chevron, I think, has the ownership that it does. But a company that is ahead of where Marathon wants to be is Apache, APA. I would take a look at that. But you're going to need, to Jimmy's point, in recovery in oil prices and natural gas prices.